While we try to be as helpful as possible, this podcast should not be considered as professional or financial advice. It contains general information only, and you should seek out professional advice for your own personal circumstances before making any financial decisions.
Welcome back, guys. I'm Julia.
And I'm Nick.
And I'm Maddie.
And this is the Enthusiast Lab. Welcome back to another episode of the Enthusiast Lab. We have our lovely Maddie with us again.
Hello.
And we are doing kind of a finance refresher episode where we're going to cover all
things finance.
All things finance again. And
basically like beginner level finance. So then you have a good idea of what certain things are, like the grants and what schemes are around, and maybe a little bit about deposits and things to look out for to get you into a better position as a first home for many first home buyers, but also for second and third home that are coming back into the market. We can have a bit of a combo. But I want to take over and just say, firstly, thank you, Maddie, for coming in, and thank you for our last episode that we forgot to thank you for.
Yeah, my pleasure. My pleasure.
That was Julia's fuck up on that one. I am completely blaming her on that.
It's okay.
But
I'll ride that wave.
Accept my apology.
But thank you so much.
No, thank you.
Okay, so let's go back to bare basics. And you are a mortgage broker.
I am.
And I think a lot of people don't realise the benefits of using a mortgage broker. So let's talk about what a mortgage broker is.
Yeah. So a mortgage broker essentially does the same thing that you'd be getting if you're going to a bank direct, except gives you more options. So simple terms of putting it, we don't have a tie with any specific lender. We work with a variety across the panel. We look at what's your best option, what has the best rate, serviceability, everything like that. And we choose that bank for you. So it's completely to the client's discretion.
Okay.
Perfect.
Do they have to pay for your services?
No. So, I know I look expensive,
Yeah.
but I'm free. No, so...
Sold.
No, so there's no cost, like any upfront costs or anything like that. It's just, obviously, you're not coming to us and getting the ball rolling unless you need finance and something from the situation. So
Yeah, okay.
And for the clients listening, it's you guys get paid by the bank.
Yeah, so it's a pure like commission structure, flat percentage from the bank. So we don't get paid higher from one bank compared to the other. I know sometimes that can be a misconception. So there's no, what's the word? Like it doesn't benefit us if we choose one bank over another. We get paid the same way. It's purely for the client's best interest.
Yeah, killer.
Perfect.
What about... no, it's gone straight past me. Never mind.
Oh.
Whoosh. So what are the benefits of using a mortgage broker versus going directly to the bank?
So I would say the bank's not going to tell you what another bank can offer you better. So like I said, again, repeating myself, but we don't have a tie with any lender. So whatever's best for the client, a bank. Also, the banks have their set times, 9 to 5, whatever it may be.
Yep.
Obviously, you have a point of contact with a mortgage broker, a bit more personal approach as well, like coming in. It's not too corporate like how branches are, and just someone kind of to hold your hand from start to finish as well.
Yeah.
And someone looking after your best interests rather than the best interest of a bank. If you're going to the one bank.
Yeah, exactly.
The difference between construction finance versus established finance. And for our listeners, we're talking about construction home loans versus buying an established home.
Maddie's laughing at me this time because I'm trying to fix this damn mic that makes me sound like I'm like 50,000 meters away.
Nick's having microphone issues.
I'm having microphone issues. If anyone's watching, I look like a fucking midget because I'm trying to get this shit sorted. I'm not in my normal position. Not my position.
Salty.
I am a little bit salty, so I'm struggling here.
Just hold the mic and talk to the mic.
Fuck off.
What was the question, sorry?
Yeah.
Established finance versus construction finance.
So in the way of your borrowing power, it's the exact same. So you can't really service higher if you're getting a established compared to the bank's going to lend you what the bank's going to lend you.
Okay.
Your deposit side of things and kind of the process is going to be different.
Okay.
Construction is always, obviously we're working with land and construction. So we
Yes.
need to wait on build contracts. There's land developers involved, things like that, titles,
Yep.
all the rest of it.
Sometimes rebates when they're available.
Yeah,
Yeah.
so whatever it may be. So there's a lot of other aspects that get involved.
Yep.
With established, it's usually quite quicker.
Yeah.
Because it's just the one contract of sale. You're not waiting on contracts or changes with the property, the design, whatever it may be. It's just you're getting what you're getting. But the deposit side's always going to come in a lot higher with established because you don't get things that we'll touch on later, but the first time owners grant, stamp duty concessions depending on the price, things like that.
Okay,
Yeah,
so you
okay.
would say that for a first home buyer, might be better to look at construction.
Yeah, if you had the exact same property price, call it $600,000 house and land package or a $600,000 established property, you're going to see a massive difference in the funds you have to pay to get into something similar.
Yeah, okay. Interesting. And then we did touch about credit scores last time. Is there anything we want to add about credit? Did we talk about credit scores?
Yeah.
we did.
Yeah,
No,
we
we did. Is there different credit scores that a client can see versus what a bank can see? Is there a way to check it, that kind of stuff?
So the banks will go off Equifax.
Okay.
So that's your stock standard. I know there's like Ilion and other kind of providers out there. The banks are always going to go off an Equifax check. So we run them once we have your authority, of course, and it doesn't leave an inquiry or like a harsh mark on the file, like it would if you were like going to the bank direct, and like it's going to show that you made an inquiry at Westpac, whatever it may be.
Whichever bank.
Yeah. So it's a soft. You don't see it.
Yeah.
Is that something that clients can do on their own? Create an Equifax account or anything like that?
I don't believe so.
Okay.
Because you have to pay for the subscription and whatnot. You need authority and like compliant documents.
Yep.
So look, we're happy to we get the authority check. We can run it. We can see where we're sitting. Yeah.
Yeah, okay,
sweet.
easy.
And credit checks, obviously, is that the be all or end all with finance? Like, if you have a shit credit score, does that mean you can't do anything?
No. So flat answer, no. You can obviously get things like your credit file repaired. You can see a repair company. If it's something like missed repayments, if you want to wait a couple months or 6 months till maybe it can roll off, or we can show good conduct, there are ways around it. The bank's never going to, like a major lender isn't going to give you finance if you've got defaults and missed repayments and things on your loan, of course. They need to protect themselves.
Yep.
But there are things you can do to assist your credit file to get it in a place.
Together in a better position.
Yeah, so if you have a bad credit file now, it doesn't mean you cannot get a home loan. It just means there's probably a few more steps you need to take.
Perfect.
Yeah.
Yeah, and I think because like we've got a company. Julie's just trying to fix my mic. Hey.
Yeah,
There
I'm
we go.
eating
There we
my
go. Fucking, we'll get there somewhere along this episode. So we actually have some contacts that can help people to help try and fix some of those credit scores. But the thing is, guys, is even though you may think you've got a bad score, you don't know until you've got it checked. So we tell people when you catch up with us to fill in the document. It's a 2-page document. It's basically one portion's your basic info. The next part is about a little bit about your finances, what income you've got, a little bit about debts. It gives a good overall scenario for Maddie to then suss it out with your payslips. The second page is that authority form to do a credit check, which is that soft inquiry that Maddie mentioned. Get that done as soon as possible, because then Maddie can help suss out what the fuck the go is. If there is something that needs to be sorted out, it's not the end of the world. And like she said, perfectly, honestly, it may be a few extra steps, but it can be done. We've done that multiple times before.
Yeah.
Doesn't mean that it's not going to be able to be done afterwards. We've had people that come off bankruptcy, have waited the times and all that, everything's cleared, and now they can take out a loan. But again, you don't know until you have that conversation.
Yeah, definitely.
And I wanted to touch upon the 3 types of finance things, which is LOE, your letter of eligibility, versus a pre-approval versus a formal approval. I think for clients who have never heard these words before, it can get a little bit confusing.
Yeah, definitely can.
What do they mean?
Yep.
And like where in the process do they come up?
So essentially you've said it in the right order of how it usually goes. So an LOE stands for a letter of eligibility. So that is usually what is dealt with between myself and Nick and Julia.
Yep.
So that's when we've qualified an initial qualification on the client. So we've run the credit check, we've looked at the pay slips, we can say, okay, they can borrow up to X amount at this bank. And from all the information we have on file, it looks like it's good to go. Sometimes land agents need it before you can get a block. It's just from a formal letter, not meaning formal, unconditional formal.
Yes.
But just on our company letterhead signed off by myself, confirming like the name, the details, the loan amount that you can go up to, and that you're eligible for finance up to this amount based on the information we've seen. So it's just that initial kind of reassurance that a lot of land agents and really whoever it may be need to know that the client's in the position to get things moving.
Yep.
Yeah, perfect. And that's not an actual application, is it?
No, that's nothing that you need from the client. It's purely just there's nothing that's been lodged on that behalf. So no bank needs to be chosen, nothing like that. It's just us doing our due diligence on our side to make sure they can do something. Yeah.
Okay, cool. And there's no point you pulling your name and signature behind something if it can't be done.
No, of course not. So we will never, it will always have to be of something that we can see is going to happen.
Yep.
Yes.
And that's based on doing the credit checks, doing all the checks that we can do before actually going further and meeting with the client, going through bank statements, things like
So
that.
basically, someone in the industry is now giving you the tick of approval to say you can borrow up to this amount if you choose to do so.
Yep.
You have been assessed, and if your situation remains the same, you can do so.
Yeah, so the letter of eligibility, it's not any sort of approval by any means. It's just a piece of paper saying, you've sought that kind of professional advice.
Yeah.
And they're vouching for you essentially, saying,
cool.
we can do something.
Okay, cool.
And then the next one is your pre-approval.
Yep. So pre-approval is basically what happens once you've met with the client. So they want to know, they know which bank they want to go with. They've got an idea of their situation. We've sat down, looked at all the options. They say, yep, we want to do this loan amount, this package with Mr. Enthusiast. We want to go ahead. We get the whole application prepped and we can lodge for a pre-approval. So a pre-approval is valid for 90 days.
Okay.
Yep. And a lot of the time when we don't have build contracts yet, we can lodge for a pre-approval to get the process started because we know we have up to 90 days that that's going to stay valid for.
Yeah.
Contracts never take
man.
that long.
Not with our builders. We're fucking in and out, mate.
In and out. It's definitely extremely fast with you guys. So then that comes in and then we proceed to the next stage.
To formal
approval. Yep. Formal approval is basically once we've got the contracts on file, we've ordered a valuation. That's just standard practice the bank always needs. That's come in all okay.
Yep.
And then they unconditionally approve your loan. So it's there. There's no turning back from the bank side of things. It's formally approved. And then they proceed to issuing your loan documents for signing to then proceed to settlement. Sign your life away.
Yep.
Settle on the land, and then
best of luck with your payments.
Yeah. Sending my condolences.
Yeah.
No, joking.
Jesus,
It's
brutal.
such an achievement.
Oh, it's a fucking big achievement,
Yeah.
but at the end of the day, it's the most scary and most daunting part.
Exactly, and that's why another reason of a mortgage broker over a bank, it's you do have that extra support, and it makes the world of difference when you go to a builder or a mortgage broker. You have someone that you can rely on. Is going to answer your calls, going to answer all the questions they might think is silly because they don't know, and just like judge free, just just helping them to get into their first home.
Yeah, so all the people who are riding that roller coaster and at the low having a panic attack.
Yeah.
This is when you call Maddie.
Yeah,
This is when you call
I'm
Maddie.
stressed. I don't know what to do. Am I going to be able for this? Can I eat after this?
9 times out of 10, it's fine. They just need reassurance on the situation. You just explain it and it's good to go. Yeah.
Okay, so let's...
Oh, actually, I'm going to follow up on that. So obviously with when it's approved and it's now been drawn out and stuff like that, do you still help the clients throughout the process of the build?
Yes. So in the way of, say, it's been formally approved, they've signed their documents, they've now settled on the land, so everything's in their name now. You don't get rid of me just yet. So obviously you have your progress payment schedule. So depending on what stage you are at in your build, you're going to get an invoice from the builder, progress invoice of X amount to release for your slab, for your roof, whatever stage you may be. That's when we still have contact, and you can send that to me signed, and I will continue to send it through to the bank and make sure the funds are released on time to the builder. Everything's going above board. So essentially we're always still in contact until you receive the keys, and then sometimes they want to look at refinancing, so we go through it again.
Killer.
Or actually, you mentioned that you wanted to touch about something refinancing that we forgot to mention in the last
In our
episode.
last episode, yeah.
Yes. So there is the option as well out there with some majority of major lenders participate in it. They will have a different name, but essentially it's the alternative refinance option. So it's a assessment where, say, the client has to be failing servicing.
Okay, so they basically couldn't afford.
Yep. So
enough.
based on, they could have had, this is for refinances, so they may have got the loan when the rates were in the 2s or something like that. Based on their income, then there was no problem. But with any, interest rate rises and they want to refinance out of Keystart, and it's killing them nearly an 8% interest rate.
Yep.
And they just can't make it based on like current buffers. If the property is not in lender's mortgage insurance space, so with the value,
Okay.
so if they've got enough equity in the property
Yeah.
and they're failing servicing based on their income right now, then they will be eligible for that alternative refinance option.
Okay.
You click that and essentially the bank reassesses your application and puts like a 1% buffer, which you'll then see 9 times out of 10, then they can service the loan.
Okay.
Yeah, so
Right.
it still helps them get out of where they are now, as long as their repayments are going to be lower where they're going to than
Then-
where they are now.
Yeah.
Than
Okay.
where they are.
So there's a few T's and C's, but it's all what they would want to be achieving anyway. So as long as
True.
the repayments are going to be lower, they're saving money, they've got that enough equity space in there and they're failing on what they are at the minute. If we click that little button on the calcs with the banks, 9 times out of 10 you'll see it jump up and we look like we can do something.
Wow.
Yeah,
So
okay.
actually, a good example, maybe, and let me know if this would work. Let's say we had a couple and the missus is staying at home and the partner was doing FIFO, right? And he's actually built the house
Yep.
and then decided, shit, this isn't for me. I've now moved back to Perth and my income's dropped. And then looked at refinancing. This might potentially help
Yeah.
in that situation
Yeah.
because they went, now that the income's dropped enough, but the repayments are being a little bit more difficult.
Yeah.
They need to refinance.
Yeah.
That might be an option.
It is. So it's always worth checking. So we'll
Yeah.
never say no straight off the bat. We'll always look into if there's another avenue we can go down. And if we say tick, tick, tick for this, you're actually eligible, let's go down this route instead. Rates stay the same. There's nothing different. There's no fee involved or anything like that. It's purely just
An opportunity.
an opportunity of like,
Yeah.
that 1% kind of buffer space that they
See,
apply.
This is the shit, guys. Like, this is what it's all about, having a fucking broker, because the banks aren't going to do half of this shit. Most of the time, the banks will literally look at you and go, this is what your current situation is. Yes, you can do it. No, you fucking can't. Whereas people like Maddie literally go, cool, with this current one, maybe we can't, but we've got options A, B, C, D, potentially as a different option, because she's going through multiple banks with multiple options, looking out the best opportunity for you guys.
Yeah.
And that comes in when you're building a home, whether you decide to use it just to buy a home or you just want to look at using it to refinance your home to someone else.
Yeah.
Like, it's a fucking no-brainer, man.
Quick question. I don't know if I've ever asked you. Do you do stuff like car loans or just mortgages?
So just mortgages,
Okay, cool.
so residential. But if you do need like a contact or a client wants to look at getting a car loan, like we do.
Work
Have
with a
someone.
couple
We
of-
do, yeah. There's like third party like companies that we can recommend and things like that are great. But myself, I don't write them.
Okay,
Yeah,
cool.
cool.
Yeah.
You're better off refinancing the house, pulling the cash out, and then doing
Yeah.
it that way.
Consolidate the loans.
Yeah.
Okay, let's jump into some schemes and grants, and let's
Yes.
kind of cover what they mean, who's eligible for them,
Okay.
etc.
Yeah.
So the first one's the first home owners grant.
First homeowners grant, yes. So this can sometimes be confused with government schemes and who's eligible for it and whatnot. So the first homeowners grant is a payment from the government for first home buyers who are either permanent residences or Australian citizens. If you're building, you can't exceed a $750,000 house and land package to be eligible for the first homeowners grant. And basically it's a $10,000 one-off payment that's credited at time of settlement.
Okay.
So it takes into account the funds that you have to pay. So technically it's 10K less out of your pocket.
Yeah, okay,
Yeah.
cool.
And it can't be considered as part of your deposit.
So it is.
Okay.
Essentially, it is considered as part of your deposit, but it's not in the way of cash. So
Okay.
if I said, the total deposit $60,000, but they're first home buyer, it's $50,000.
Okay.
Yeah. Okay, cool. Because you can total it.
Yeah,
from
so
there.
we just always include it as like the funds to complete portion
Right.
of the loan.
Okay,
Yeah.
cool.
Okay.
Because a lot of people are like, let's say you've told them you need to come up, the bank wants $30,000 contributions, and then they turn around and go, I've got 20, I'll just use the 10K grant and cover it. But, well, that kind of doesn't work all the time.
So when we quote and we'll say, you need X amount to get in, we're always already factoring in that first homeowner's grant. So if we
Okay.
know you're eligible and it's going to work with your situation, then the figure that we quote is after the first homeowner's grant.
Right.
9 times out of 10. But we go through that breakdown from start to finish when we look through the funds required too.
Yeah, perfect.
And with the first home owners grant, if it's a couple, if
Yep.
one of the couples, like the female has already owned a home, but the male hasn't,
Not eligible.
not eligible as
Yeah.
a couple anymore.
No. So both applicants, if it's a de facto relationship, they both need to be first home buyers and both meet the eligibility. So, that would then mean if, say, the female applicant had never owned a home before the male applicant had, and she goes through, she's not eligible, obviously she's on the loan and the title, she won't then get that next time.
Yep.
Yeah.
Yep. Okay, cool. And it's not a double up either. It's not
No.
10 and 10.
No, it's not 10 and 10.
Fucking spewing.
Yeah.
Okay, let's go through what is stamp duty.
Stamp duty. Stamp duty is that really annoying,
Yeah.
unnecessary one-off payment that you have to pay in the block. So if they're a first home buyer, you actually don't pay stamp duty up to a $300,000 block of land. So you pay $0. If it exceeds that to a certain figure, it's like a concession amount that you pay.
Yep.
Once it hits X amount in the fours, I believe,
Yep.
then you pay full stamp duty how you normally would. So you get, being a first home buyer, the benefit under a certain price, a little bit of a concession, and then you pay full stamp.
Yep.
Yeah.
With established, obviously, you're always paying that stamp duty if the property is over 450.
Yep.
So if you got like a 700 house and land package and your land's under 300,
Buckle the fuck up.
yeah,
Because you got quite a bit of stamp duty you need to pay. Because by that stage, they need to pay the full 750 value of the home as stamp duty, won't they?
for
Not
established.
yeah, for established.
No, so they would pay it wouldn't be the full amount because they're still putting in a deposit.
Okay.
So whatever the deposit size is, plus the stamp duty,
Oh,
and they
shit.
don't get first homeowners grant if it's an already lived in property. So
Yeah.
if it's established but it's like brand new and no one's lived in there, yeah, you are eligible.
Okay.
So that's like, I was fortunate like that with my house. But 9 times out of 10 establishes,
Yeah.
so
it's all the properties.
Yeah.
Yeah.
Okay,
Shit.
interesting. I didn't know that.
Nah.
Um,
Throw that one into the fucking
yeah.
mix.
there you go.
Let's talk about the single parent home loan.
Yep. So the home guarantee scheme.
Yes, that's the
yes.
one.
So they've renamed it a few times just to make it a
Yeah.
bit more confusing
Yep.
for first home buyers. But essentially, the home guarantee scheme has the two portions with it. So the first one you mentioned, the single parent.
Yep.
The single parent scheme is available to, they don't have to be first home buyers, which Nick and I were speaking about the other day, which is great, but they have to be single and with a dependent. So whether that's widowed or divorced, they just can't be in a relationship and have a dependent. And basically you can do a 2% deposit, no lender's mortgage insurance, up to the value of $600,000.
Yep.
Guys, and a dependent isn't a pet. A dependent has to be a child.
Dependent is a child,
Has to be-
sorry.
Is
Even
that
though, like, we look at our parent, our
the
pets as
fucking fur
kids.
babies?
Yeah.
They're my fur
but
babies.
it has to be a human
It has-
child.
It has to
Under
be
the age
a
of
kid.
18.
Under
Yep.
age. And does that child need to be, like, for example, if a single, we've had a few examples of single FIFO blokes that want to try and get onto it. They've got, they've had a kid with the missus, shit's hit the fan, but they only have like a portion of,
As long as they've got custody.
as long as they've got, is it full custody or a portion of it?
They
type of
don't need to
thing?
have 100% custody
Okay.
because they're obviously still that they're dependent
just
on
dependent,
on
yes.
the dad. So
Okay, cool.
it's still
Yeah,
fine.
sweet. Okay, that's yeah. I thought asking that one.
Yeah, okay,
Yeah.
no, that's a good question.
Yep. So
Thank you.
that's the single parent route.
Or
Yep.
income wise, it's the limit's
Yes.
125.
So
or?
the limit is 125. So that also misconception with that is based on your most recent notice of assessment. So
Okay.
the figure that's noted on there. So if you've had a pay rise since the last FY when you did your tax and now you're on 140, 150, it's fine as long as your notice of assessment is
Shows.
under 125. Yeah.
125 before tax.
Whatever, your notice of assessment. So I believe that is net that appears on there.
I thought that was gross.
The thing is gross, but like less any deductions type of thing.
Yeah. So
Yeah,
it will
so it's
say
not-
like your like anything they have to about your tax portions you can see,
Yes.
but the main figure up the top.
Oh, okay.
Yeah,
Yeah.
to the
so,
left-hand
Yeah.
corner.
Yeah.
Yeah.
So the top figure, guys, where it says the taxable income.
Taxable income.
That's the one, and it will show all of it. And it has to be 125 or less.
Or less, yeah.
If you're over that, you won't be able to fit into that requirement.
Yeah.
As a single
Applicant.
parent applicant.
Okay.
Fucking thing.
Um,
Fucking thing. No offense, guys.
Whatever you may be.
Hey, whatever it is.
Jesus Christ.
What? I'm just fucking pulling it out there.
The next one is the first home lender scheme.
So first homeowners,
Okay.
Yes.
new home, first home deposit
Fucking-
scheme.
It's changing.
It's changed a lot of
non-stop.
times.
Yeah, and look, as we approach the next FY, it can change again.
Yeah.
But based on where we're sitting at the minute, that is for first home buyers only, unless if someone's a second home buyer, they mustn't have had the property for a minimum of 10 years.
Right.
Okay.
That's
Yep.
right. Yep.
So as long as it's been like discharged or closed within 10 years, then they are still eligible, which is
Okay.
good.
Yep.
Again, for permanent residences or Australian citizens, 600K is the cap.
Mm-hmm.
Income threshold is 125 if you're single, 200,000 combined income if you're doing it with a partner,
Okay.
based on your notice of assessment again. Yeah.
Yep.
So that option is 5% deposit, no lender's mortgage insurance. So up to the value of 600,000.
Okay.
Okay.
And this one's different from your first home owner's grants. The first
Yes.
home owner's grant, the first one that we talked about, that's a WA state grant. This one that we're talking about now is a federal grant.
Yes,
Yeah, okay,
correct.
cool.
Yep. So you're
Federal
still
scheme.
Yep.
So with the like federal schemes like the first home buyer scheme, and even though you're only doing a 5% deposit, you're still also eligible for your $10,000 government first homeowners grant. So it's not one or the other.
Yeah. Cool.
It's sweet.
Yeah.
It's all together. Like
It's-
you can add it all on.
Yeah, as long as you're eligible and you meet the criteria, then that'll
Yep,
be
killer.
credited and
With
Okay,
the
perfect.
with the schemes itself,
Mhm.
so the parent one and the first home
Yep.
buyer one, do they? So you mentioned it's like permanent resident and citizen for both of them, right?
Yep.
What about Kiwis that are on a visa that is technically a permanent resident? I think there's been a bit of an issue we've
There
had
has.
previously. Hey?
Yeah, so that one's hard because hopefully there's changes in the upcoming FYA. Come July 1st when they announce some changes to the scheme, it would be great because technically, even though Kiwis, New Zealand citizens are automatically considered permanent residences of Australia,
Yep.
their actual visa notice doesn't state like indefinite and like permanent resident, so they're not eligible for the scheme.
Right. See,
Right,
this is the
okay.
kicker because we've had a few issues of this, and they're like, "Nah, man, I'm PR." I'm like, "Bro, we've sussed it out," and the banks themselves, like the federal scheme, states that you can't at
Yeah.
the current moment. You can do everything like a permanent resident, but it's not working with this scheme currently.
Yeah.
But if that changes, that will be fucking killer. If it
Yeah,
does.
that would be great. But then that can be a little bit misleading, confusing because no, they're not eligible for the federal scheme, but they are still considered a permanent resident, so they still get the first homeowners grant.
right.
They're not considered like a foreign. They don't pay any foreign tax or anything like that.
Mm-hmm.
Still
Still
above
the same.
board. Yeah,
Yeah.
just
And
not the scheme.
it's the same with stamp duty exemption as well.
Yep.
Yep. Yeah. Cool.
Okay. Let's talk about guarantor loans.
Love them.
They're a bit
I
more
just do so. I do a lot
yeah,
with
she's
Nick. Yeah.
she's actually doing quite a few of them with us
Yeah.
at the moment.
What are they? How do they work?
Yep.
Etc.
Okay. So a guarantor loan essentially is where a family member, so immediate family, has a property and they've got sufficient equity of at least that 20% plus a buffer if it's with another bank, the more the better.
Yep.
Where what should they want to use as security like collateral
Mhm.
for like their son or their daughter's purchase.
Okay.
So if someone's doing a house and land package and they don't have the deposit, the guarantor will use their property as security to cover that deposit.
Okay.
So 9 times out of 10, the clients actually don't need to contribute any funds to get into their home
Yep.
because they can borrow up to the maximum. So if your package is $750, they can borrow the full amount.
Okay.
Yeah, wow.
Yep, as long as they can service for it,
Yep.
and as long as, of course, the guarantor has enough equity, they agree and happy to go through, then it just saves them not paying any lender's mortgage insurance with a $0 deposit.
Yeah.
Majority of the time,
That's huge.
they can still contribute funds if they want to bring their loan down. That's completely fine and up to them if they want to help with repayments.
Yep.
But you're not required to.
Yeah.
Okay.
Okay.
Yep. So the guarantor's property is tied on it's not on the loan, but you would see it like a caveat almost on the title.
Yep.
Okay.
So that stays as long as they're linked.
Mhm.
Once the property's built and say they have that 20% that they were covering with their property in equity now and they can refinance, you can refinance the guarantor off. So then it's standalone and it's not like linked to any other
It's not
property.
linked.
Okay,
Yeah.
Yeah.
So you can basically remove that. So then the guarantor, if they wanted to do something in the future, they can
Yeah.
do so and stuff like that.
Yeah,
So
exactly right.
they're not there forever. It's
No.
only until the new property for for their child or for whatever the situation is, until they have enough money in their property
Yeah.
to then refinance and discharge
Yeah.
the guarantor property.
Yeah, correct.
The security, sorry.
Yeah, and with market growth at the minute, it's coming in a lot quicker than I think sometimes they
Yeah,
think.
yeah.
So it's not for the life of the loan. It's not 30 years.
No.
It's as soon as they've got that equity
Yeah.
position.
Yeah.
Fuck, we've seen some in like 6-12 months, some are 2 to 4 years.
Yeah.
At the end of the day, it's properly just sit and write it out and watch
Yeah.
it grow.
And it can also be confused. The guarantor doesn't make any payments for the
Okay.
loan.
Yeah.
So
Yep.
they're not assisting with the repayments each month or each fortnight, whatever it may be, but they are liable if the clients were to not be able to make repayments anymore and went off the face of the earth as such.
Yep.
Then if the bank can't repossess the house and make their money back, they can go to the guarantor for their 20% portion. So it's not the full amount, which sometimes gets confused as well.
Yeah.
It would be the 20% of the package price
Okay.
that they were securing with their property. So then they can come to you for that amount.
Okay.
Okay.
Yeah.
Can it be, as an example, if shit hits the fan
Mhm.
and they don't make the repayments and the bank decides to sell
Mhm.
that
Yeah.
property and there's a shortfall of 20,000, do they go to the guarantor to chase that 20 or do they chase the whole 20%? Do you know?
So they would only be chasing what they're missing
Okay, cool.
as
Yes,
such.
sweet.
So
Yeah.
From what I know
Yeah.
anyway,
Okay, cool.
yeah. So because they're not, it's almost double dipping.
Yeah.
Yeah.
Well, technically, not for this one, but like they're kind of double dipping with standard loans when they're charging LMI when they're taking out the insurance anyways. So the bank's always covering their ass
Yeah.
anyways.
Yeah.
In the first place.
Yeah.
Fucking pricks.
Is the
Anyways, that's
guarantor able to sell their home?
No.
No. So very much.
It is a caveat.
It is a
until,
caveat.
Yeah.
until you can get it discharged.
So it would obviously be a conversation making sure majority of the banks you're required to seek legal advice from a
Okay.
solicitor, the guarantor is. So it's a one-off payment of around $450 to $500 depending where you go. We always explain that in the first appointment so it's not a shock.
Yep.
Yep.
And they get a detailed like legal advice of pros, cons, what's involved, restrictions, things like that, so that they're completely aware and to make sure they're not coerced or anything like that.
Yeah.
It's just for a compliance from the bank side. They want to make sure that they've done the research and got all the information.
Okay.
Understand what
Yeah,
they're
and
signing
understand
up
what
for.
they're getting into.
Yeah.
Yeah.
A follow up on that is if the guarantor, let's say it's the mum and dad
Yep.
and the dad, they've got it all. However, they're not working anymore. They're retired. Can they still be
Yeah.
eligible to use that property
Yeah.
to help their kid out?
Yeah, so every bank's different
Okay.
with their policy with guarantor loans. Some banks are a lot better and more seamless than others. There's banks that we use where it's purely based on the equity portion. So
Okay.
it doesn't matter about their income. They don't need the income side of things. They just want to make sure that they have enough equity in their current property with the balance that they've got owing. It might be unencumbered, like they have no loan,
Yep.
which is even better. It's just what
Yes.
it's valued at. and they just want to make sure that they're covered on an equity standpoint.
Okay.
Yeah.
Perfect. That's a
Easy.
good one.
Okay. We kind of did savings methods last time. Nick, do you have any other questions?
Well, just savings in general. Like this is a good refresher. Like, if a client we get it all the fucking time, and it's a really big, question mark is, how much deposit do I need to try and get started? Like, is $5,000 enough? Is $2,000? Is 30 grand? Do I need 60 grand? Obviously it changes, but is there anything that you could try and help a lot of the listeners and shit to help them out with what to do?
Yep.
What's the first steps?
So there's going to be all different deposit options with different banks, different schemes. There's, like you said, there's going to be a lot of different paths. As low as 2,000, it was back in the Keystart days. That was quite popular with Keystart's rates at the minute and their like cap on like income and property and everything like that. You don't see too much going on.
I don't think we've done one for ages.
No.
At least a year.
Yeah, so that was more the real low. Obviously, you get the 2% deposit with that single parent scheme and things like that too, plus fees. Yeah, so that's always something to count for. You can do across the board, it's that minimum 5%. A lot of the banks offer that. You don't need to be a first home buyer to be able to do it.
Yep.
Kind of working out 5% of your desired package price is kind of a good way to start.
Okay.
There's obviously being conservative. There's fees like settlement agent costs, everything that we account for, if stamp duty is payable, if it's not, things like that. But as long as if you've got that 5% genuine in your account of your package price, you're in a good spot, essentially, to then look into your options further and get a better breakdown. But the more the better, of course, for someone. But you just reach out and we can have a look into it.
Yep.
You just mentioned something.
Genuine. Yeah.
That's something we haven't covered, and I don't have it in my notes. Genuine savings, what are they? How long do they need to be in your account to be considered genuine?
So banks have different policies again, but across the board, genuine savings are considered payments from your salary. So salary credits are always genuine. So depending on how much you got paid each week, it's going to depend how quicker you can get there, of course. But anything that comes from your employer, genuine, that's fine. The bank, if you're doing a 5% deposit option, always want to see that you have at least 5% of your package or purchase price genuine in your account.
Okay.
Which is, like I said, if it came from your salary. If you've sold a car or you've sold an asset or whatever it may be, or you've got gifted funds, that's not considered genuine until it's sat in your account for 3 months.
Okay. From the moment it lands
From
in
the
that
minute
account.
it lands in the account, if you want to put that towards your 5% genuine, because the certain bank we're going with needs to see that, then you need to wait 3 months from that date to make sure that you're like adding to it. It's basically the bank wanting to see that you can hold the funds, you have the ability to save.
Yes.
It's kind of just like a risk, because we're in lender's mortgage insurance space, we're doing the lowest deposit. Make sure we can hold on to those funds.
So basically, if you guys get the gifted funds, don't spend the gifted funds and then top it back in.
Yeah, so there are other banks as well that don't have no genuine savings policy.
Yep.
Like Commonwealth don't. So you can do. They don't do 95. They don't do a 5% deposit for construction.
Okay.
So just want to cover that.
Yep.
But things with the scheme, if you chose Commonwealth.
Yes.
Every bank has their pros and cons, and if you may service there, if you don't.
Okay.
But something to consider if it was like you couldn't wait the 3 months, you had everything good to go. That is an option.
That might be an option if everything else falls in line.
Yep.
Yeah, killer. Oh shit, I lost it. No, never mind. I lost it.
Okay, well, when we get Maddie back on for another episode.
Oh, so what happens if... Okay, so like... no. So we've done the 5% and about, obviously, first-home buyers. If they're a second-home buyer, what sort of rough figure should they start aiming for? Like, is roughly 10% of what they're chasing a good idea for deposit? Because now they're going to have to...
Stamp.
Yeah, stamp duty and all
so it's
that.
hard to give an exact figure without obviously taking into account the block price and things like that. But if you are a second home buyer, you only pay stamp duty on the land value, not the build.
Yep.
So finding out that kind of, it's always going to be a lot lower than established, like we spoke about. There's easy calcs online that you can always suss and have a look at before if it was premature and you haven't spoken to a broker yet,
Okay.
figuring out that stamp duty that you have to pay, you can still do 5% deposit, like I said, if it's with the lender that accepts it.
Yep.
But you don't get that $10,000 first homeowners grant as well. So
Yeah.
you're going to need more of a deposit
Okay.
To help cover.
to help cover the fees that you
Yes.
have to pay.
Okay.
Yeah.
Following up. Oh fuck! I forgot it again. Okay, no.
Nick's flustered.
I'm turning into a fucking old person forgetting shit. All right, so we've done the first home buyers, we've done the deposits and shit. Okay, yes. So obviously, because you mentioned about, obviously the more we can try and save, right?
The better. Yep.
Yeah. Now, in the current market, some of the land that's coming out is like 5, 6, 7 months away, right?
From being titled.
From being
Yep.
titled. So that obviously means there's only so much you can do. But if people don't try and find an avenue to get the ball rolling, they might be priced out of the market.
Yeah.
And they might need some extra time to save the rest of the funds.
Yeah.
Would it be worth clients to potentially reach out to us or yourself, even though they've only got a couple grand savings at the moment, to at least get the ball rolling and have an idea what they can borrow, and then work out a plan with yourself
Yeah,
about that
definitely.
time frame
Yeah.
to get to that point?
Definitely. So you're always better off getting a game plan ahead than not knowing. So
Yeah.
I would definitely say, don't be, what's the word? It can be overwhelming if you you want a $600,000 house and land package, but you've only got a couple grand in your account. There's always ways to save money. If your borrowing's there from the bank and we've got everything good to go, but we just need to save, there's obviously ways we can do that. We do monthly check-ins. We make sure, we can check in and you're across the board. We aren't financial planners, so
We can't tell you how.
we
how
can't
to
tell
do it.
you like the method and things like that, but we can definitely guide you and help
Yeah,
along the
perfect.
way with, checking in and letting
Keeping
you
you
know.
accountable.
Yeah, and letting you know what you need to get to and a time frame.
Yeah.
So the budgeting side of things is obviously on the client, like
Yes.
depending on what they get paid and things like that, but we can do all we can on our side to help you feel a bit more like you've got a plan together.
Yeah,
Okay,
perfect. We can give you the game plan, but the ball's in your court, basically.
Yeah.
For the clients, they need to, you as the listeners and people wanting to know all the shit. At the end of the day, it's you. If you don't save it, you ain't getting shit. We can give you all the tools to do it, but you need to be able to follow. If you deviate from it, shit can go wrong. Actually, had another question about the genuine savings, and this actually came from a client recently. They had all the genuine savings,
Yeah.
and they're waiting with the bank and
Yeah.
stuff, but shit hit the fan. A vet, they had a vet bill or something. They had
Yep.
to pull some money out,
Yep.
and then they obviously topped it back in.
Yep.
Is that the end of the world
No.
straight away?
No, it's not the end of the world. Obviously, emergencies happen.
Yeah.
Depending when you lodge your application too,
Okay.
because when you had your bank statement to show you had those genuine funds, obviously if unforeseen changes happen, that happens.
Yeah.
But if it's, it's easy as topping up as with your next salary credit,
Yep.
it's not the end of the world.
Okay.
Just making sure, obviously, if you're dipping
Money out.
like money out, making sure, well, you're the one who has to pay it at time of settlement, so you want to make sure you can get it back.
Okay,
Yeah.
cool.
Okay.
Okay, sweet.
Yeah.
I think it's just, because the client, she did hit the fan. They had
Yeah.
they had applied,
Yeah.
and they said, I'm going to have the money back next week, but
That's fine.
I was really worried about it. I said, we'll chat to Maddie, but
Yeah.
it's not the end of the world.
No.
Make sure you put the fucking money back.
Yeah.
And maybe plus some, just
Yeah.
to make it a bit more nicer,
Yeah,
rather
and-
than just that.
Balances go up and down, things happen.
Yes.
Like all bills your rego, anything that can come at one time, it's not the end of the world if you know the next fortnight or the next week, whatever it may be, you're putting the money back in from your salary and it's still considered genuine. If you need to show the genuine funds, things like that aren't too much of a problem.
Okay.
Perfect. I think that was a big one. Just,
Yeah.
because obviously it's so daunting and there's so much riding on it.
Yeah.
So they get people freak out going, shit, like everything's fucked now. I've pulled out $1,000. This is the end of it. I'm going to cancel. Like,
Yeah.
bro, like, calm the fuck down. Like, it'll be all right.
It'll be fine.
It'll be
And
all right.
also on that note, I know there are deposits clients have to pay up front with the bill
Yes.
deposit and a land
Yes.
deposit. That's considered towards your genuine savings too.
Oh,
Okay, cool.
perfect.
So as long as obviously we can prove that those funds, call it 5,000 in total deposits you had to pay, you had that 5,000 in your account for a minimum of 3 months beforehand,
Yep.
then that's considered towards your genuine savings and your
Perfect.
total deposit as well.
Perfect.
So it all ties into each other. It's not like dead money. Sometimes people can be a bit confused. You needed it in the end anyway. You're just paying a portion up front.
Yeah, cool. Perfect. So that just means when it comes time you be approved, it will be, if the total was 30, it'll be 30 less the deposits you put towards the house and the land if you're building.
Just with a copy of the receipt.
Yeah. A copy of the receipt. Perfect. Anything else, Julia?
Ready
Is
to
there
plug?
anything?
Actually, anything you want to add,
Maddie, is there anything you would like to add?
Oh.
That any first home buyers or second home buyers might want to know some info? No? Yes?
We have definitely covered a lot, but I think just reaching out and just starting somewhere rather than nowhere. We're always here to help, and we can look into every avenue for you. So whether that's you're eligible for the scheme, if you're not, savings plans, we'll get it all together. So I just feel like not being too overwhelmed by the process, having trust in it, and things can change all the time with policy. So if someone told you something a couple months ago, it could have changed now.
Yeah.
So just knowing that things are always on the move, and not giving up completely, I'd say,
That's
well, I mean, we recorded this in June. Maybe we can get you back in like August after all the new policies come out in the financial year.
FY, if there's anything changes, definitely.
Definitely come out and do some updates on what's happening in the finance industry.
Yeah, that would be good.
That would be really cool.
Cool.
Okay, let's plug.
Thank you, Maddie, for coming.
Thank you.
Thanks, guys.
Thanks, Maddie, for coming on board.
That's okay.
We really do appreciate you coming on.
Thank you.
You're a
Thanks,
fucking
Maddie.
legend. Fucking legend.
Especially because we sprung so much onto you. You've really knocked it out the ballpark.
She's knocked it straight out the park.
Yeah.
So how can people find you?
You can find us on TikTok. It's Oui Finance. Our Instagram, we.finance.
Yep.
I had to ask Julia for that, and I worked there, so sorry. Also our Facebook and our website too. So reach out, DM, call, email, whatever it may be.
And it's Oui with a OUI, like the French way, oui Finance.
Oui.
And you've also got your personal Instagram.
I do, yes. Maddison Mortgage Broker on Instagram too.
Perfect.
Yes.
Which we now follow.
Yes. We
Yes.
now follow.
After the last episode.
After request.
Yes. So we follow now. And obviously, if you do reach out to We Finance, ask for fucking Maddie. So then we know that it's going to go to herself. The girls are all awesome there. However, we have a bit of favoritism for Maddie.
Yes, we do.
Amazing team.
You can find Mr. Enthusiast on Instagram, Facebook, TikTok, website, Google, YouTube, Apple Podcast, and Spotify. If you guys can leave a rating or a review, that would be amazing. Hit the subscribe button if you're watching us on YouTube. And just remember, guys,
We're not here.
To fuck Spot.
Fucking oath.
I can't take myself seriously saying it.
see ya.
Bye.
Bye.